everybody, and welcome to the 78th edition of LM's Weekly Wrap, our weekly program to cover the market developments. This is the last program as far as this calendar year goes, and what a year it has been. A year where we saw some very sparkling performances from different sectors of the economy which performed quite well. We had positive news flows. There was some volatility, but in the end, I think all's well that ends well. It's been a very, very sparkling performance from sectors which were least expected to perform. So I think, of course, the stars of this year is going to be the PSU sector, where we've seen some very, very strong performances. As we enter 2024, I think we are entering this year on a very, very positive note, and very, very positive cues as far as the domestic economy is concerned and the international developments are concerned. To explain more about this, we have with us Jash. Jash, welcome to the show. Kindly take us ahead before I take over the sectoral related developments.
Thank you so much, sir. As we entered this week, we were quite skeptical as we had seen a strong correction last week, but it seems to be that market is in a full throttle mode, and it hit a new high yesterday and today. So I think it's time for celebration, but as well as time to be cautious, as we keep mentioning in every program. This is today's rally, I think, is because the government of India announced the price cut of 10 rupees in petrol and diesel prices. I think that is what led to a sentimental up move in the market today, along with the macros being very strong. So that is what has led to the market being positive today. Coming to the global scenario, I think, as we have been mentioning, that the US rate cuts in the coming year have been poised the up move in the market. The one very important factor is the Houthi rebels have been firing missiles on merchant ships coming from the Red Sea. It's a 460 kilometer straight line, so I think that is what is a cause of concern, and that will somewhat hamper the import-export business to and from India, because they're directly aiming to the Israeli ports. So the Europe to India ship movement is getting hampered. Of course, the global the countries have been taking some steps, but I think we should be slightly cautious over there, because that can definitely cause some abrupt moves over there. Coming back to crude oil price, it is strong at $80 a barrel right now, slightly below $80 a barrel, and that has been that has been very good for the Indian economy and the emerging markets as a whole. I think there's not much to say in the global and domestic market anymore, and I would like to hand over to Nirav, sir. Thank you.
Yeah, thank you, Jash. So yes, global picture is showing a sign of stability, but I'll straight away come to the domestic economy, and I'll be covering some of the commentaries which have been done from different sectors, which have been coming from the different sectors of the economy, on what has really worked for the Indian economy. In a way, this program will sum up whatever has happened in the last 4 to 5 years. When we were at the cusp of COVID, there was a lot of uncertainty in the economy, but I think this government of ours has been very bold in taking certain steps. They have front-loaded the capex. By front-loading the capex, it means that the government has been bold enough to go ahead with financing of capex programs and creating infrastructure in the economy. For example, in 2019-20, India had spent around 3.5 lakh crores on infrastructure development. In the next year, the government had earmarked 5 lakh crores. After that, 7 lakh crores, 7.5 lakh crores to be precise. And in this year, the government has planned to spend about 10 lakh crores on infrastructure development. So you just see that with every passing year, the tax collections have become more and more buoyant. We've seen GST collections improve consistently, and the government has done a very good job of utilizing these tax proceeds for creating infrastructure within the economy, creating a multiplier effect in the economy. This is what has been stated in the recently held analyst meet of Siemens Limited, and they are very confident about the prospects of the economy as a whole. So if we were to sum up the whole thing, during the last 4 years, government has spent 26 lakh crores on the infrastructure development and the capex within the economy. And the best part of the whole thing is that about 70 to 80% of the amount what we are talking about has already been implemented. That means that it has been spent on the projects which were earmarked. So there is a very tight leash over the how the projects are being implemented, how they are being executed in a time-bound manner, and impeccable execution of the projects. So this is one aspect. The second aspect is that now, as government has done a lot of spending, as it has front-loaded the capex, the government is expecting that the private sector will also come forward and take some bold decisions and act in a manner to boost capex, because already we are seeing that in the private sector the capacity utilization is at 75 to 80%. Typically what happens is that when capacity utilization touches 80%, it is time to do the fresh capex. That is the time where companies start thinking big and start making decisions about how to go ahead with future expansions. So this is another aspect. And one more important aspect is that the corporate balance sheets continue to be very healthy, banking balance sheets continue to be very healthy, and consumption continues to be robust. So these are all the factors which have favored the Indian economy, and today we are seeing the resultant factor of what we are seeing is that the stock prices have been started moving up and they have touched new highs. We are seeing markets hitting new highs, but still experts are of the view that markets are not looking that expensive. They feel that there are still pockets of excellence which are left in the economy. This is one. The second part is the second company which I would like to cover is the commentary from JSW Steel. JSW Steel has stated that they are very optimistic as far as the domestic steel demand goes. As it is, we have seen that whenever infrastructure, there's a boost on infrastructure, that means that there's a multiplier effect on the economy. You have employment which tends to go up, and you have cement and steel which derive great demand. So we've seen a statement coming in from JSW Steel that they want to hit a capacity of 50 million tons, and they're willing to spend an additional 1 lakh crores on this additional capex what they want to do. So I think this has boosted the steel sector stocks. We've seen Tata Steel, we've seen JSW Steel, Jindal Steel and Power, JSW Steel, SAIL. All these stocks have rallied very strongly in trade. So this is the effect of the infrastructure boom in the economy. The next stock which I'd like to cover is L&T. L&T is it's basically the proxy to India's infrastructure story, and we are seeing most of the companies, whether it is L&T or whether it is the likes of KEC International, Kalpatarus or Power Mac. Today, a lot of companies have won orders. In today's trade itself, we've seen a lot of companies declare orders to the tune of 1,000 crores to 2,000 crores, which have been backed by companies. So the infrastructure players, most of them have their order book full. I think the focus now is going to shift on the execution as far as the infrastructure projects are concerned. So I think as we discussed, whether it is steel, whether it is the infrastructure related players, coming next is the cement, which cannot be far behind. We have Ultratech Cement, which we cover over here. Ultratech Cement has stated that they are very positive about the outlook as far as the cement demand is concerned. They have made an acquisition of Kesoram very recently and are marching towards a capacity of 182 million tons per annum. And this is in line with the stated objective of achieving a capacity of 200 million tons per annum. So here again, we've seen very good upgrades coming in from the different brokerages as far as the cement sector is concerned. Most of these brokerages are very buoyant as far as the prospects for the cement volume is concerned. So cement volumes are likely to see a growth, and undoubtedly when the infrastructure story is going great guns, definitely there's going to be a huge amount of demand for cement and steel. The third important aspect in this entire thing is if steel and cement are going up, then definitely power has to catch up. So we've seen power demand at record highs on account of the fact that the global warming is also contributing to this. But we are seeing Coal India, NTPC making a comeback. We have come out with quite a few ideas as far as our Diwali picks are concerned, which is now very well known to all of you. We had come out with our Christmas ideas also, LM's Christmas picks, which were essentially Cipla and Hero MotoCorp. And I think if one were to identify the potential stars for the next year, for 2024, then I think they would be Gas Authority of India, GAIL, Bharat Heavy Electricals Limited, that is BHEL, and third is SAIL, that is Steel Authority of India. So if one were to take an exposure to all these companies, these companies could be potential wealth earners in the time to come. Rest, I think railways continues to be in great form. We are seeing railways continue to do well. The stories today's winner was RailTel. The stock was up about 15 to 16% in trade. Rest of the stocks have also performed quite well. Defense continues to do well, especially the shipbuilders. And I think the star group of this year will be the Tata Group. We are seeing Tata consumer products do very well in trade today. We've seen Tata Motors, where the market cap has doubled in the last 1 year. We are seeing a lot of Tata Group companies essentially which are doing very well in trade. And I think with Tata Group racing ahead, I think Reliance should not be far behind. We should start seeing good amount of momentum in the Reliance group also. And also it's time to look at Adani Group companies also, where the Adani Group is also trying to play catch up as far as the project execution etc. is concerned. So I think to sum up our program, I think a lot of potential, a lot of steam still left in the economy. We are seeing PSU stocks rally, whether it is the PSU banks or whether it is the oil marketing companies or whether it is the power companies etc. So definitely there is a huge amount of potential, and I think going forward as we go into the new year, I think markets are looking forward to good auto sales numbers also, because most of the auto stocks have rallied well in trade. I think that will be the first piece of data which will be coming on the 1st of January, that is 2024. So I think Hero MotoCorp, Bajaj Auto, Tata Motors, Mahindra & Mahindra, all these stocks, Ashok Leyland, all these stocks have rallied in anticipation of good numbers for December. Apart from this, we'll be also having the GST numbers. We'll be having quarterly updates coming in from select companies, which will give us an idea about how the sectors are progressing. Lot many things to discuss, but time constraints permit no further. So with this, I think we come to the end of our program. Wishing you a very, very happy 2024, and I'll hand over to Jash for the closing remarks.
Thank you so much. That was very insightful. I think we rounded up the year very well with Nirav sir's commentary, and please don't forget to like, share, subscribe to hear more from us. Thank you.
Thank you.